It was my father's money anxiety. I inherited it from him. I dragged it around the whole of my life. My brother has it. He got it from his mother, and she got it from her mother. I think we've traced it back through several generations to somewhere in the 1800s. And that was profoundly transformative for me. What I learned was that I didn't know very much about money and myself. I was secure in a financial sense, but not in emotional sense. And this journey that I'm on with my money and my money story and my money awareness continues even today.
Money is never just about money. It's about who we are, what we've been through, and the systems we live within. And that's what we talk about here on the Money Story Project. This is a storytelling project about money and what it means to be human inside systems that so often forget our humanity. It's not about fixing our so-called flaws, quick fix finance hacks, and the latest gimmick. We invite people to tell their own money stories. We also bring in subject matter experts who share both their lived experience and their professional wisdom, helping us make sense of what we've carried and our path forward. Today I'm joined by Dennis Harhalakis. Dennis is a certified money coach, founder of Cambridge Money Coaching, and a money coach trainer for the Money Coach Institute of California. Dennis is on a mission to help people change money from being a source of anxiety, shame, and limitation to a source of energy and empowerment. As well as the coaching, Dennis also runs financial wellbeing webinars for employers who want to support their employee financial lives and develop money coaching for parents, which is a unique talk that shows parents how to help their children to build a healthy and confident relationship with money. So a big welcome to Dennis.
Thank you. Thank you very much, Harriet. And thank you for inviting me.
It's really great to have you here. Now, in the intro, we've mentioned money coaching a couple of times. So I think it'd be helpful, perhaps, if you could just explain what money coaching is.
So money coaching is best thought of as a framework for understanding patterns, behaviors, and emotions around money. And that's the way I look at it. It's understanding what drives you, because most of it is hidden. We have a subconscious inheritance that we picked up from our parents or family of origin and the environment we grew up in. And that essentially is driving a lot of our behavior around money. So it's helping people understand those patterns, behaviors, and emotions. And because you need to start with awareness. When you want to look at money behavior and you want to understand money behavior, you need to think about how to understand behavior, not focus on money. People get very confused about this. They think, I need to understand money and how money works. And that's really important. But money behavior is about behavior. It's not about money. So what I help people to do is understand behavior, where it came from, positive aspects, the negative aspects, the challenging parts, and help them to build up the behaviors that are taking them towards the person they want to be, the best version of themselves, and not get hijacked by some of the negative things or challenging patterns and behaviors they'd picked up from messaging in child.
Exactly that. Yeah, this is just for context. We're having this conversation because we realized we had quite a similar approach from different backgrounds, but we found our way to a similar sort of thinking around money. And as I really resonate with the idea, and it's kind of proven as well, that emotions are far more influential than we realize. And it's just such a game changer when you've examined that side first and think about it in that way, where you're going, okay, what's going on here? What do I believe? What's happening? And it's just, such an important area. So I'm so happy that we're having this discussion. I alluded there to the fact that we've got slightly different backgrounds, and you've spent sort of 30 years working in financial services, and you left to become a money coach. So tell us a bit about that journey. Like, what happened to create that shift, and What did you learn about your own relationship with money along the way?
Yeah. So there was a little gap. It wasn't one of those things where I just woke up one day and went, oh, I have to walk away from all of this. But I had fallen into my job in the 80s in the way I think a lot of us who are that age fell into jobs. Totally different now, of course. And yeah, I'd spent 30 years in financial services. I worked in trading rooms. I worked in wealth management. I helped set up a private bank with a couple of other guys. And so that was my space. I knew a lot about the financial system. I know how it works. I know about investing. I know all of those aspects. And for reasons that really revolved around moving back to the UK from where we were living, which was in Singapore, I came back to the UK because we have 3 boys and we wanted them to be English. And I walked away from that whole corporate space that had very much defined me for 30 odd years and found myself wondering what to do. So I tried to get a job in the UK and was quite disappointed to find that my skill set wasn't directly transferable. At least nobody wanted it, let's put it that way. And I'd underprepared. And so I was looking at financial well-being and I thought, well, maybe I can take all of this stuff I know in my head about financial services and about the financial system and teach people, particularly kids. It's just a very worthy thing to do. This was in 2014, actually, so a little bit ahead of where the current government is, but all kudos to them for putting that into place. And I came across money coaching, and I had this realization that I knew a lot about money, but I knew very, very little about money and myself. And so what that really meant was that I didn't understand what was driving my behavior, what was really going on. And I had this realization at that point in time that I had inherited my father's money anxiety and I'd been dragging it around for the whole of my life. I had anxiety. I didn't really realize it. I didn't really overthink it. I was lucky enough never have to really worry about it too much because I worked hard. I was well rewarded. And so I never really had to engage with the process. But once I stopped getting that regular paycheck, and once I started to try and live off my savings and investments and then try and get another job, I moved into a space of severe anxiety around money. And it was just at that point I realized that it was my father's money anxiety. I'd inherited it from him. I dragged it around the whole of my life. My brother has it. He got it from his mother and she got it from her mother. I think we've traced it back through several generations to somewhere in the 1800s. Mm. And so the money coaching course I went on built that awareness for me, opened me up to realize what is that process that drives what you inherit, I guess your subconscious inheritance around money. How does it work? How do you work out what you picked up? How do you work out how it's influencing you today? So that is the framework that I referred to in your first question around it. And that was profoundly transformative for me. So I trained as a money coach. And as you mentioned, I now work for the Money Coaching Institute, training money coaches. So what I learned was that I didn't know very much about money and myself. I was secure in a financial sense, but not in an emotional sense. And this journey that I'm on with my money and my money story and my money awareness continues even today, partly because I'm always working on it, and partly because when you teach something, stuff comes up, people ask you questions, you realize things over time that you hadn't realized before.
Yes, that certainly resonates with me, because something that I found was I thought I was kind of learning more about money and, emotions and the more holistic aspects for the benefit of my clients. But actually, it was also helping me, because it was also, certainly very eye-opening about my own relationship with money and where that's come from, etc. So you mentioned there about the certain things you realised. So what kind of stuff did you realise as you went through that journey?
So one of them, and I wrote a LinkedIn blog on it recently, was the realisation that it's not about needing more money. It's about, for me anyway, it was about feeling safe with the money I had. Yeah, and it's very subtle but also fundamental difference, which is more money isn't going to make you feel more safe, not necessarily. But if you have enough money, then you need to feel safe with the money that you have. And it was life-changing for me. So learning to understand my relationship with money, and maybe I should kind of explain a little bit about relationship with money, because it's bandied around quite a lot. And if you'd asked me in 2015, I started the money coach journey in 2018. If you'd asked me in 2015, about my relationship with money, I probably would have made some glib comment about, I just need more of it.
Yeah, if only it were that simple.
As I've worked in this space, I developed my model for kind of understanding your relationship with money is it's a set of beliefs that we have about what we can do, be, or have with money. Right? And those beliefs drive our behaviors. What's it okay to ask for? What's it okay to spend? What's it okay to spend on? They're all beliefs. And so if I want to examine my relationship with money, your relationship with money, anyone's relationship with money, I break it down into 3 bits. How do I feel about myself? How do I feel about money? And how do I feel about money and myself? Now, how do I feel about myself is really important because it's the cornerstone of my relationship with everything. My relationship with exercise, my relationship with myself, my relationship with my family, my relationship with food, whatever it is, work. It starts with, how do I feel about myself? What is it okay for me to ask for? So if I feel good about myself, then I believe that I'm competent. I have confidence in my knowledge, my decision-making processes. I believe I have a level of control over my future. I take ownership of my outcomes. And fundamentally, my self-worth does not depend on my net worth or my possessions.
Yes, and that's such an important realization to come to, isn't it, with that? Because when you are thinking that you have to achieve or accumulate certain amounts of money to feel worthy, that's when I think it can be difficult. If you can find it in yourself, then it's always the foundations.
In essence, I am enough, which is a very powerful space to operate from, because when you believe that you're enough, then it really helps to understand how to position yourself in the world. Now, unfortunately, childhood and the world teaches us that we're not enough, and we are surrounded by a 24-hour news cycle or media cycle that is always trying to sell us stuff on the basis that we're not enough. But I'm here to tell you that you are enough. We are all enough. We were all born enough. But parenting is a process that's not really understood when you're in it, not even afterwards sometimes. But a lot of that is where you learn that you're not enough. And some of that messaging can be direct, as in, what's wrong with you? And it could be indirect. But essentially, you come out of it feeling like you're not enough. Well, a lot of us do. But you are. And so that feeling of not enough is actually messaged to you by other people. It doesn't reflect your true worth. It's what other people have projected onto you, and it's what society projects onto you so they can sell you stuff. So the core of this is you are good enough. You are enough, right? Now, when I feel good about money, then money is simply a tool to achieve well-being. It's not the work of the devil. It's not the root of all evil. It's also not the only thing that matters in life, or something we don't talk about. And then it's not this confusing thing or unknown thing. It's important to be good with money, but money is not the most important thing in the world. It can't be, because otherwise we would have, we didn't evolve with money. We've had money for a while now, but we didn't evolve with money. It can't be part of core survival. It's got into core survival because we use money to buy the things that we need for survival. But that's because we don't live in communities anymore.
Yes.
Right. When we did, or at least not that long ago, 10,000 years ago, then we didn't have money, we had community. And now we ask money to do all the things that community used to do. And that creates a further set of problems.
That is so interesting, because money is supposed to help us be in community, but the power balance sometimes seems to shift where we feel like we are having to follow the rules and do the right thing and make sure we measure up to money. But actually, that's not how it was supposed to be, or, ideally it shouldn't have been that way.
We put a lot on pressure on money. Money, I think, is morphed into this thing that engenders powerlessness and shame, and we can explore that in a little while. But some of it is because we take our own shame and we project it onto money. Now then, when I feel good about money in myself, I understand how money works. Money, or thinking about money, doesn't make me feel confused, anxious, ashamed, inadequate, guilty, all of those things. Or rather, those emotions don't come. I don't think money makes you do anything, but, those emotions don't come up. Then I'm also comfortable having money conversations, open money conversations. I'm comfortable asking for what I'm worth, right? When I feel good about money and myself, and I'm comfortable engaging with the financial system. At an identity level, I am a person who manages their finances well. So part of what I like to think is, when you talk about developing a healthy relationship with money, how does that manifest itself? It means that I can have conscious, positive engagement with the financial system. Because you need to, right? You can't just step outside of it and pretend it doesn't exist. And this is kind of this really fascinating paradox around money, is that we need it because it intertwines and touches every part of our lives. If I have an unhealthy relationship with alcohol or gambling or drugs, I can stay away from the places that get me into trouble. I don't need to rely on willpower. I can stay away from pubs or get offline, Although, again, all this stuff is hounding you 24/7. But I can't get away from money because I need to use it. I need to engage with it. And so I need to have a healthy relationship with money, and I need to have conscious, positive engagement with my finances, because avoidance doesn't work.
Yeah, and it's almost like it's kind of coming full circle from kind of being the feeling of reluctantly, I need to take part in this system, but I don't know if I'm good enough and if I understand what's going on, to, well, who am I really? Let's reflect. Let's look at this, where have I come from? Where's this belief come from? What's going on? But then it's re-engaging, because actually, unless you do go off into the wilderness and disappear from society, we are functioning within money systems. And so it's coming back to well, who am I and what is it all about? And but also, how do I thrive in the system, even though we know that it's not ideal and it's not great for us, but knowing that, without the shame and the fear and the anxiety, it's like finding that balance then, isn't it? And coming back around to it. And I guess that's, part of that journey almost, to kind of work out who you are and then work out how to live well within this money thing that we've made up. Yeah.
Well, we need to start with an awareness of what's driving our patterns and behaviors and our emotions in this space. And then you can engage with it. It's very hard. Well, it's impossible to change your behaviors if you don't know what's driving them. And that's not really supposed to sound trite, but where most of my clients have come from is with money is, I'm an adult. It's only numbers. Why is it so hard? Why can't I do this? What's wrong with me? And then you've moved into the shame spiral, because what's wrong with you is that core wound from childhood where people said to you, why can't you sit still? What's wrong with you? Why can't you learn? What's wrong with you? Why did you hit your sister? What's wrong with you? Why can't you do this? What's wrong with you? And so when you bump up against the money in the financial system, which isn't particularly straightforward, and let's face it, no one ever shows you how to understand or manage it. So you're muddling along, driven by a set of subconscious behaviors that you're not aware of. It's never going to go that well. If I gave you a car, Harriet, and you've never driven before, and I say, just take it off, one of two things are going to happen. You're either going to go too slow or too fast, but at some point you're going to crash, because you don't. It's not a matter of knowing how the car works in the sense of the engine. It's about your relationship with the car. So if that makes sense. So I'm an adult. It's only money. What's wrong with me? And then you're trapped in shame. And then when you're trapped in shame, you're like, what am I going to do with this? Maybe you've got some debt. Maybe you've got a whole bunch of things you can't save enough, or you can't even spend any money because it's too scary for you. Who are you going to talk to about that? Who are you going to sit there and go, oh, you know what? I've got this real problem with money. Can anyone help me? And because we don't talk about it.
You don't talk about money. Yeah, that's it. That's what we're talking about. That's the whole point of like, let's talk about money because we don't talk about it. Exactly. Yeah.
You talk about it. It's on the TV. It's on everything. When it's numbers, people talk about it. But finance is numbers. Money is beliefs and values. And so we don't talk about how money makes us feel, do we? We argue about how to split the bill or whatever it is. So we talk about money.
Well, it feels vulnerable. Yeah, it's the vulnerability of acknowledging that there's a sort of belief that emotions are lesser than logic, which when you unpick that and you lead with emotions, you realize, well, humans are driven by emotions, and actually they're not something to overcome. They're something to like give you information, and actually sometimes they're wrong. Sometimes with the emotions around money, I guess you're hanging on to things that perhaps doesn't serve you anymore. It's a story that is not really true today, but you've still got to like process why you think that, I suppose, haven't you? Yeah.
All behaviors are learned. They all served a purpose. They, as you said, they might not serve you right now, but they all served a purpose, and we need to honor them. And then we need to say, is that still helpful? Is that thing where I spend everything I've got because if I didn't, someone would steal it from me because I lived in a place where my money or whatever I put away was insecure. Is that serving me right now? No, it probably isn't. But at the time, it's totally understandable. It made total sense for you. If someone ever gave you any money, you spent it before either someone stole it off you or someone asked for it before it disappeared, right? For whatever reasons. Not so great later on in life because you need to build savings and you need to have a cushion to protect yourself. But yes, totally understandable at the time. And that comes from a place of compassion. And I think when you realize that you don't make most of the choices, no one chooses to be ashamed around money or anxious or any of those things. You're not choosing any of those emotions. When you understand what's really driving it, which is a set of subconscious patterns that you inherited from childhood through a process you didn't control, which is learning, infant learning, based on behavior from adults around you that you can't control. But when it comes to money, is usually reactive. So you're picking up on the worst behaviors of people around money, creating a set of messages about yourself and money. And then those become beliefs, and those beliefs drive your behavior. When you map that out, then you can have compassion because you didn't choose any of it. If it's not going well for you, you didn't choose it. It's not your fault. You're not in charge of the process. But with awareness, you can be. And that gives you agency. But if you don't start with self-compassion, when you change something or try and change something and the process doesn't go well, because it never is a straight line, you're going to go, Rosa was never good enough. I never could do this, You were always good enough. Start with self-compassion, and then we'll start the change process.
And it's interesting you mentioned that, because actually when we think about it, the financial systems were devised by, the last set of adults in front of us, and things have things stick a bit. But to an extent, it's quite difficult to change financial systems. But when we look at it, that actually they're created by people,
Sure,
and collections of people that have all this stuff going on as well. So that that's where it's interesting that obviously they're not perfect. But what do you think is the biggest thing you've learned about how the financial systems actually work or don't work for different groups of people or different types of people?
Yeah. So when I was in it, I was kind of blissfully unaware of my own issues and my own relationship with money. But one thing that was very clear to me is that just because you work in a bank, you're not any better with money than anyone else. Right? You don't absorb financial literacy through osmosis. You're sitting in a bank, your relationship with money personal array follows you to work. So I work with people that had huge credit card debts. I worked with a guy who was head of governance and credit at an institution who went bankrupt because he didn't manage his personal affairs very well. So yeah, working in the financial services system doesn't make you any better with money than anyone else, which surprises most people actually. But I don't see why just because you work in a bank, your relationship with money should be any healthier than if you work in advertising. Now,
people assume that if you work
right.
with finances, that you must be really good at them for your own finances, don't they? And it's not always the case.
Well, you make an assumption that people who are financial advisors are good with money and accountants are good with money, but financial advisors go bankrupt and accountants go bankrupt. So I can tell you they're generally much, much better with money, but it's not. But for those of us that worked in banks, that really didn't. You really, at least not at the personal level. We may have been very good with hitting sales targets and designing structured products and a whole bunch of stuff, but that's numbers, that's not money. So, So on balance, I think the financial services industry, and I think you're kind of talking a little bit about the personal financial services space as opposed to the whole thing. But I think, in general, it's amazing. It's this amazing time machine. You can put money, you can get a mortgage, which essentially is borrowing money from the future, bring it into today, buy a house with it, and then pay that off over time. So that's a time machine. You can also put money away today and collect it as a pension in the future. And you can do the two simultaneously, which is pretty mind-bending when you really think about it. So that is the amazing thing about the financial system. But the personal financial service system is great if you understand it and know how to use it. And it's awful if you don't, because it will use you. Coincidentally, there's a new book out called Fixed by a couple of academics that they show essentially how the system, the personal financial services system, benefits people who are wealthy and educated, and it actively encourages financial mistakes by those who aren't, right? And making it really difficult for regular consumers to make sound financial decisions. So in effect, the industry exploits the mistakes that we make, the mental shortcuts that we use, and it weaponizes our own lack of knowledge against us. So, obscure things about how much credit is actually costing us, bundling things together. There's a whole bunch of stuff. The book's just come out and I haven't read it yet, but it's fascinating. You know it in a sense, because if you don't pay any credit card fees, which I don't, and if you don't pay any overdraft fees, somebody else is. Intuitively, you know that if you're getting all of your personal banking for free and all of your credit and debit cards for free, that must be someone else must be paying the fees, and it's not just always the merchants. So the financial services system, I can't remember the exact quote, but it's this slightly, I think it's never really acknowledged how much of an enabler it is. I think it tries to sell just enough credit to people so they can pay it back. It's like a drug dealer trying to keep selling enough heroin for the person to enjoy themselves and not kill themselves on it. Because if you have too much credit and you have to go into default and bankruptcy, then everybody loses. But as long as you're paying the interest, the overdraft interest, the fees, or whatever else it is, or whatever's wrapped up somewhere, hidden in there, a break fee or whatever clause, then that they can make the money. So it's
I always think of it as we talk about financial products, but actually the person is the product, because you're the thing that the unit that the lender is looking at is great. What's the lifetime value of that person to me in interest? Is a cynical way of looking at it, because that's essentially what you are. You're kind of a source of interest.
If you do a straw poll amongst people and say, okay, well, who'd you bank with and how long have you banked with them? I think the number is very high that it's the same one you set up with when you were a teenager, the very first bank account. And I can guarantee you that bank is probably not suitable for your needs, because it's probably the same four that were around when we were growing up, and I can tell you none of them are worth banking with. So there's a level of the other thing that's weaponized against us is inertia, and just as, I'll deal with it later or whatever else it is. It's never been easier to change a bank. And I suggest that you definitely want to look at it at least. So this is back to the conscious positive engagement. It's like, I've looked at it, and you know what? Whoever it is still great for my needs. You're like, great, fine. It's like the same thing as checking your insurance every year or whatever it is that you do. It's like, yeah, no, I need to do that. But if I don't, I'm pretty sure that somewhere in there they've changed the rate on my savings account from 4% to 0.5% because they've changed the name and the type of the account, and they've trapped, or a whole bunch of money in there because I haven't bothered to check that I'm now earning 0.5%. And guess what they do now? They don't even send me a statement anymore. They send me a PDF, or they send me a message saying that my statement is available to download online. So how am I going to know what's going on? Little stuff like that. So
it's knowledge and it's understanding it, isn't it? It's both. It's knowing, interpreting it, understanding it, and working out if it's big enough to change your behavior and whether you should,
and it's engaging with it. Now, on the plus side, I have banking set up, so I get a notification when money comes in and money goes out, and that's really, really great in real time. If you think about where we are from a banking perspective, I can send you money and it will be there in 30 seconds, 20 seconds. I mean, unimaginable compared to what we grew up with, was you put a check in and maybe a week later the money was in.
Oh, yeah. The money would appear, yeah.
So, lots of positives. But again, the core point is, if you don't understand the system, it will use you. It's the same old thing about the poker table. If you don't understand who the patsy is at the table, it's probably you. So that's what conscious positive engagement is. And I kind of understood this when I started looking at financial literacy and financial well-being. Now, what I can say from having operated in wealth management and private banking is that rich people get missold stuff all the time as well. So, bankers take advantage of their clients all the time. That's why financial advisors go bankrupt or they get sued or whatever else it is, because that's, that also goes on.
That's a really interesting observation, because maybe not we, but me, I assume that it's the people that are being kind of potentially exploited are the ones that are struggling, in terms of the sort of the end of the spectrum where you're trying to just managing credit cards and debt. But actually what you're saying is that the, high net worth people are also being potentially misadvised or not really looked after in their best interest. And aren't as aware of it either, not really putting their trust in their advisors and the system as well. Yeah.
It's a different set of products, but the principle is exactly the same. Seth Godin, who's amazing. You know Seth Godin, the marketing guy?
Yes.
He's got this lovely quote, which is, most of the systems in our lives are orchestrated and manipulated so that we will make decisions that won't help us. Systems exist to keep systems existing, right? And so the high net worth financial system is the same as the low net worth. It's just slightly different. Now, what I can say in terms of sophisticated products or whatever, but just because someone is wealthy, it doesn't mean they understand the financial system. The wealth creation process is different from the wealth maintenance process. The kind of things, unless you inherited your wealth, and even then you might not understand how the financial system works. But if you've created wealth, when most of it is created from, say, entrepreneurial activity, that means you're great at whatever it is that generated your wealth. It doesn't mean you understand personal finance or structured products or investments or any of that stuff at all. Probably doesn't. Right? And so, getting rich quickly is about taking a highly leveraged bet. It's not how you keep your money. That might be how you create it. You use leverage in the system.
And there can be luck there as well, obviously.
And luck a lot of time is the major in all of it, because you only see the survivors. So there's a survivorship bias to this whole story.
For those of you listening, if this episode is resonating, please do make sure you are following wherever you get your podcast from, so you'll be the first to hear when the next episode lands. And if you know of a pal who would enjoy this conversation as well, please forward it on to them so they can enjoy it as well. Okay, let's get back to the conversation. You mentioned something interesting there about inheritance, and that's something that comes up for a lot of people because that's kind of part of life. Let's run through a scenario. So I find personally it's interesting that actually it can be quite confusing and emotional to receive money as much as it is to have like financial distress at lack of money, if not more so. So, scenario where somebody inherits like £100,000 from their auntie, somebody or other, and they go to the financial advisor and say, like, I don't know what to do. I've just received £100,000. What happens when you go and talk to that financial advisor now? And what do you think should happen?
Great question. And I'm going to talk in general terms. I've worked with financial advisors for a number of years, and some of them, in fact, all of them are trying to do the best job that they can. The problem is that the financial services industry, planning industry, that it treats money as numbers as opposed to what it means to someone. So what does money mean? So Harriet, when I say what does money mean? What does money mean for you? What comes up?
For me, I always think of it now, and obviously been on a bit of a journey myself, as a value exchange and almost like symbolic of your values and what you put out, and then you can express that in monetary terms, and the idea of kind of, money comes to you, money goes away from you.
Okay. So, I mean, most people, if I'd asked that, they would give some variation of freedom, power, or security, or safety. But you can add enoughness, belonging, status, self-worth, identity. All of those things tend to come up. As you say, you've been on a journey, so you've got a slightly different view of it. If you asked me, I'd still say it was security and safety, right? And that's okay.
Oh, it absolutely is those as well. Yeah.
Yeah. So what it means to me, what I feel about it, as opposed to kind of, a definition of it or how it kind of operates in society. And I do like the energy thing. I've got some thoughts around that. So the thing with money is, as I said, it's power, status, control, freedom, belonging, enoughness. And the financial services industry doesn't teach people to talk about money in those terms. It teaches them to talk about money in terms of numbers. So if I go to the financial advisor and I say, look, I've just inherited $100,000 from Uncle Ron or Auntie Di, and you know what, I'm struggling with this a bit. Can you help me? Most people will think that I'm really asking a technical question, an investment question, and they'll go, "Oh, okay. Well, have you got an ISA, or do you want to pay off your mortgage, or right?" So they'll go through that route. And I teach advisors around this because the fundamental thing is you've assumed that is what the question is being asked, but you haven't connected it to the client. You haven't worked out what they're actually asking you. Because if I'm struggling to receive money, if I'm struggling with inheritance, and a lot of people do, then I'm not looking for a technical solution. I'm looking for someone to help me live with the money that I've received. If I am feeling really bad, that I should have more money when other people have no money at all. If I'm feeling really bad, that I'm profiting at the death of Uncle Ron, who I was, his favorite nephew, or Auntie Vi, or whatever that is, right? Whatever the reason that I'm struggling to receive is, then telling me to put money in my ISA just isn't connecting with me at all. So what I would say in that, but the problem is the industry's trained to see it that way. And so what I always say is connection before solution. And I think this is true in anything, right? If you have a child that's upset, what you really want to understand is that they want to be heard, helped, or hugged. Now, guys will always provide a solution, right? Well, let's try and fix this, right? We're all solution orientated, and the financial services industry is solution orientated. So I say, just step back a second and say, oh, well, if you inherited some money, tell me about Uncle Ron. How close were you to him? How did you feel about him? Tell me a little bit about how it feels to receive the money. Are you okay with it? I think as soon as you open the first question, which is, oh, well, that can be really hard. Tell me what your relationship with Uncle Ron was. Did you miss him? And then the story comes out, and then they'll tell you, It's not a complex process. It's just simply saying, how you doing with it? How are you feeling about that? I can ask it in 10 different ways. Then you understand whether or not the client in front of you is looking for your support at an emotional level to make sense of the situation they find themselves in, or whether they're looking for an investment answer, because they're completely different. And maybe if your client is going, I have no idea what to do with this money, I'm really struggling with it, I wish I could give it back, or whatever else it is, maybe then your client needs to see a money coach, not a financial advisor. Said he, small, subtle plug. But the point is, fundamentally, that you need to know where they are, meet them where they are. And then you know how you can support them best. And if they say, thank you very much, that's very kind of you. He meant a lot to me, but what I'd like to do is I'd like to create a legacy with something he would be proud of. Now you can go into solution mode.
Yeah. Right? When you know the context.
Now you can do that. So connection before solution. And here's the thing, you raised inheritance from auntie or uncle, right? Why do people go to financial advisors? They don't wake up and go, oh, lordy me, I must see a planner. They go because there's something in their lives that is driving them there. There are a full set of life events that will make you want to go to, that will trigger your interest in going to, or need to go to get professional financial help. And what that means is if I'm the advisor and I'm delivering advice on retirement, I'm delivering advice on inheritance, I'm delivering advice on a whole bunch of stuff in isolation to what's going on in the client's life, there's a very strong chance that it won't land with them. It won't resonate. If I'm telling you, Harriet, how to invest Auntie Di's money, and what you really want to hear me help you with is to live with it, guess what's going to happen? Nothing. You're not going to do it because it hasn't.
Yeah, it's going to sit in the bank because you've not processed. Yeah, what it means. Yeah,
you can't do it because I haven't helped you. Because your question was not how do I invest it. Your question was help me understand how I can receive it. Now, if that's not if that's not a question for an advisor or a planner, or at least an advisor or planner feels comfortable receiving, then they say, look, I can't do this. I'll find someone who can. But you can't move forward till you feel safe to receive that money. You can't plan for retirement if you don't feel safe having a conversation with someone that understands that this could be a really difficult transition process for you.
And this is where it comes into, we've mentioned that there's obviously a distinction here between money coaching and a financial advisor. So if someone's listening to this thinking, I don't know where to start now because I keep meaning to get around to talk to the financial advisor because I'm sure I'm supposed to be sorting something out. But how do you know who you need to speak to when? And I know that's a very broad question, but from your experience of it.
It's a very good question. And so partly as an answer to that, I will say that if a client of mine wants technical guidance around anything to do with the regulated financial sector that will at some point involve buying a product. What do I mean by a product? I mean insurance, investments, anything to do with that. That's a financial planning question. Now, if you are trying to get what I think is broadly financial guidance, does this make sense? How should I think about this? What do you think would be a good place to start? How do I save money for my kids? How do I teach my kids about money? Any of those kind of generic things that don't involve me selling you something, a product, an investment plan, a cash flow, or anything physical, then start with a coach or start with a planner that is, I would say, a planner that gives you the charges. The charges a flat fee that just, my planner charges me £100 a month, flat fee. So he's not incentivized in the product space. If you've got a planner or an advisor that is remunerated by being charging 1% or 3% or 5% of assets under management. They're always going to try and get you into some kind of financial solution. I think this is the biggest problem in society, is that we don't grow up being taught how to understand or manage money. And all we've got is the financial services industry that is incentivized to sell you something. So in the middle, we have 50 million people going, does this make sense? How do I understand that? This is probably a silly question. I know I should understand this. I should know this, and I shoulds and oughts and all those sort of judgy, shamey things. And so in that space, I would say, you know, if you don't have someone that you can trust to explain it to you, not judge you for asking the question, and also not have a certain level of expertise in kind of, oh no, what you need to do is put it into crypto. Or I saw this great video on TikTok about how you can, you know, whatever it is. You need a broader lens than that for understanding the financial system. If you don't have that person in your life, again, that's no fault of yours. See if you can find a coach, a financial coach or a money coach. It's fairly new in this country, but you can search for them and just have a chat. And they will tell you whether they can help you with it or whether you really need to go to the regulated or professional financial sector. I hope that kind of distinguishes it a little bit. And if you're worried about patterns, behaviors, I want to understand my spending. So if you look at it from, you know, there's a kind of a scale. At one end is practical. How do I do this? At the other end is emotional. Why do I do this? And different people sit in different spaces. I cover both because I have a huge amount of experience. I'm primarily in the emotional. Why do I do this? Why can't I do this? Whatever, help me understand it. And then we go to the practical solution. And most people want something somewhere in the middle, if that makes sense. At some point in your life, you will need to engage with the regulated financial sector. You will need a mortgage. You may need some life insurance. You may need an investment product. And an ISA in some senses engaging with the financial system. But certainly in terms of retirement planning, cash flow planning, long-term planning, go to a professional advisor. Don't come to a money coach. We don't have that level of expertise, and we're not in that space.
Yeah, and something that comes up as well is that, you know, a financial advisor is not an accountant. So, a chartered accountant is not regulated to give investment advice and, you know, financial products. So that's something that is also, I think, sometimes people need to understand, to distinguish, is, you know, you might need a money coach, you might need an accountant, and you might need a financial advisor. And at different points, you probably need all of them.
But people go to people they trust. So it's connection before solution. So they'll ask their solicitors, or they'll ask someone who they feel safe with to explain something to them. So hopefully the financial coaching space will emerge over the next few years to fill that gap, because you don't want to be judged. Is there a right answer to how much do you have in your ISA? Well, there isn't. Right, but that's what someone's going to ask.
Yeah. How do you feel? You know,
there's a profound.
What feels safe to you?
There's a profound knowledge imbalance. It's like buying a secondhand car. The person selling it always knows more about it than you do. Right? And so engaging with the financial system is scary for a lot of people. And so they put it off.
Yeah.
And then they bump up against jargon, people that don't understand them, people that they feel are judging them, and a whole bunch of stuff. So. Yay, you know, I get it. Coaching.
And you mentioned as well that you actually also help financial advisors to have better conversations. There's probably a good chance there'll be some financial advisors listening. So what is the main tip that you have for them in terms of their conversations?
Well, yeah. So we're back to the kind of principles around what we talked about in inheritance. But fundamentally, a client's money beliefs will drive how they spend, save, and invest. And if you're a financial advisor, you're dealing with spending, saving, and investing behavior. So what that means is, to me, if you don't understand their money beliefs, it's really difficult, even at the kind of, you know, consumer duty level, to say, well, yes, I've absolutely done the very best to my client. Now, the thing with this space is you're not coaching clients. A lot of people say, oh, you're a money coach. I don't want to coach my clients. I'm not a therapist. Like, I get it. Absolutely. What I'm saying is, as in the example with inheritance, is step back a minute and try and understand a little bit about the client's belief system around money. And the way I usually illustrate this is by saying, okay, client comes in, first meeting, discovery meeting, and they'll usually say, well, I want to do X, Y, Z. They'll present with an issue, and maybe that is the real issue, maybe it's not the real issue. If at some point in that conversation, you can say something really simple like, well, we're going to be talking a lot about money going forward. So I wondered, would you mind if I asked you, could you tell me a little bit about how money was talked about when you were growing up? Now, I don't think that's a very difficult question. I don't think it's a leading question. I don't think it's a therapy question. It's not a coaching question. It's simply saying, trying to understand how money was talked about growing up. Now, if a client says to you, well, actually, you know what? We never talked about money growing up. It was a taboo subject in our household. What do you think, if you, Harriet, they could be saying to you? What could be the subcontext? What could be going on for that client right there?
Well, they're going to be quite confused. They're going to have a lot of questions that they've never been able to ask anybody,
Right.
and a lot of confusion because it's not an open topic that they can elaborate on very easily.
The point is that you don't know what's going on for the client. So you have to ask a follow-up question. And the follow-up question is, oh, wow, thank you for sharing that with me. If you never talked about money growing up, this could be really difficult for you. How are you doing? Now, what have I just done there? I've opened it up to meet the client where they are. Because if the client says to me, I always was fascinated by this. I'd love to learn about money. Tell me everything. I'm going to go in one direction with the conversation. But if the client says to me, thank you for asking me that, actually, this is quite difficult, I'm going to go in a completely different direction. I can't use the same language because the clients are in two different spaces. All I've asked them is two questions. Tell me a little bit about money, how money was talked about. And then I've followed up to ensure that I understand what that means.
Yeah, the follow-up is important as well, to say this is the context. How does that feel to you? Yeah, kind of
tells me,
where are you with
the client, I'm listening, I'm interested, and I want to meet them where they are. Because as I said, if the client says, you know what, thank you so much for asking me that, this is actually quite difficult for me. Maybe, I'm in inheritance, whatever it is. Then I can say, thank you for sharing that with me. I'd like you to know that that's totally normal. A lot of people find this very challenging when they first come into it, especially if they've never been allowed to talk about money beforehand. Of course, this could be really difficult. I want you to know that at any time you want me to repeat something, explain it again, put it in a different way, in a graph, in however you want, just know that it's totally okay to ask me to do that for you. I want you to know that that you can ask me anything around this.
Yeah. And actually that's got me thinking about, in terms of, and this is more specific for business owners, but when you are thinking about taking out a business loan, for example, which is quite common when you set up a business and you go to a broker, which is another professional that advises and sorts out another financial product, which is usually different from a financial advisor because this is talking about business lending. Now, what I see comes up a lot is that people can be very scared and worried about taking on business debt because in a individual personal context, you're told to avoid credit card debt. You're told to be careful, and it's silly and you're frivolous if you've gone and racked up a load of money that you need to pay back and high interest and things. Whereas if you're in a business, it's like growth and hustle and take the loan and give it a try and go for it. And it's kind of, if you've got this thing of actually I've always avoided using credit cards because I'm worried about getting into debt, or you've been in debt before and you don't want to do it again, suddenly going, right, well, there's 20 grand loan you can have. That can be very difficult to sit with, that I've found. I don't know if you've you've got a view on that about the perception of debt in different contexts and how sometimes it's celebrated and sometimes it's like scorned, and how that can be quite confusing when you are navigating personal debt. Get a mortgage, but don't rack up credit card debt. Get a student loan, but don't go and get a really expensive car and then take on a business loan, but don't go bankrupt. And I just think it's so interesting that there's so much judgment and mixed messages around that.
Well, there's mixed messages at a societal level, and there's mixed messages, not necessarily mixed, there's competing messages at the societal level, but growing up, you'll get a whole bunch of messages as well. So you're right in the sense that to say, well, obviously a mortgage is a debt, but that's a smart debt, right? Allegedly. And we'll get into good debt versus bad debt in a second. If you step back, there's a fascinating book called Debt, The First 5,000 Years by David Graeber, which I think you might enjoy. And have you read it? Are you nodding your... Have you read the one? So
I've got it just on the shelf over here, but it's a very big book, and I haven't read it all. I've read the start of it, but I haven't got into the whole thing.
It's a very big book.
But I can see it out the corner of my eye. Yeah.
Yeah, and so I picked it up again the other day while thinking about topics that we could talk about, and he goes through this really interesting history around debt. And he basically talks about the fact that we've been using credit. The first agrarian societies that existed, we've used elaborate systems of credit to buy and sell goods long, long before we had coins or cash. Farmers had to borrow seeds to plant crops. They had to rent the land, tools, and livestock and everything. And when those harvests failed, they went up in slavery. They went into slavery. Their families went into slavery. This happened because obviously, agrarian cycles are variable. And this happened so often in a sense that there were institutional debt reliefs, debt forgiveness went on at a very regular basis because crops fail. It's not an issue of personal failure, right? The system, so the system needs a reset. I think there's an interesting parallel around a business failures aren't necessarily personal issues. You might have COVID. You might have been in hospitality and COVID came along. That's not personal failure, but sometimes it's really hard not to see it as personal failure. And so, but there's also this recognition that the owners of capital, in the sense of those who have the seeds and the crop, the land and the tools and livestock, life is stacked against the farmer, but not the owners of capital, something that Karl Marx spent a lot of time arguing quite cogently around that. So, this, we've lived with this for a while, and the idea that you got into debt to do X, Y, Z, and then if it failed, you would be forgiven at some point, drifted out as debt as a moral issue starts to emerge with the creation of money and I think the overlay of religion. Now, if you go back to the 18th and 19th century, so the 1700s and 1800s in the UK, half the population in prison was because of debt. We had debtors' prisons. 10,000 people a year were imprisoned for debt each year in the UK. So that ended officially in 1869 or so. But the legacy of that still remains with us. So debt is frequently linked to personal failure, irresponsibility, shame. Yeah,
that wound there that's kind of right. Like, how we started, things get passed multi-generationally as well, the messaging and the almost like the trauma of what's happened. Yeah.
So I think there is a good debt and a bad debt thing. And, around that, essentially that's the moral judgment. It's around what are you going into debt for? And is it going to make the future easier for you or more difficult for you? So I'm going to use an energy thing because there's a quote I've got here that I think is just fascinating. Because money is energy. We exchange our energy and time for money, and we store it in this thing called money so we can exchange it for other people's energy. You touched on that earlier. So when you borrow money, you're selling off a piece of your future energy. Morgan Housel talks about this really, really well. He talks about in terms of I'm selling off future time, but it's energy. If you borrow future energy to increase your capacity to generate and circulate more energy, that's considered good debt. If you borrow future energy just to get something today instead of waiting for it tomorrow, then that's bad debt in a non-moralistic sense. And eventually, if you keep doing this, you'll run into an energetic debt. Then you have to pull energy from other parts of your life, your family, your loved ones, your creative work, your joy, until all the energy you need to create this healthy, balanced life is siphoned off because you've already spent it. And you end up, in an extreme sense, you end up having to pull this energy from the very cells of your body, and you end up sick.
Yeah. So it's not just money, it's energy, essentially.
It's energy,
it's a
yeah.
really interesting way of thinking about it. Is what are
Yeah, I
you
thought
actually
so
creating?
too.
Is it something in the future? Is it something, for the now? And you mentioned that earlier as well, didn't you? You mentioned that idea of the financial products being about the future, and whether it's a retirement project, it's almost like time travel between that.
Right,
I thought that was a
right.
really interesting imagery of that sort of time travel element, and going to the future and coming back to now. And yeah, there's definitely something there, maybe creative, about thinking about your future self is probably as well, isn't there, in the
Right,
mix there?
and there's no moralizing around it. It's just simply recognizing what exists. So people talk about kind of the what's the ratio of like how much do I spend or save or invest or whatever. And I think that's kind of, there's some very loose rules around this. I think the most healthier way to look at it is if you look at what you've spent, and you call it like 100. How much are you spending on the past? How much are you spending on the present? And how much are you allocating to the future? Now, what that means is, for example, if you've got a huge amount of debt and 50% of what you earn is spent on the past, you can see that that's compromising the amount that you have available today, and it's making it impossible for you to put any money into the future. So you're stuck. Now, let's say you have a healthier relationship. Let's say the number is like 20% and 50%, and whatever the balance is 30%, and you want to save more money for the future or pay down your debt, you're going to have to pull it out of one of the two buckets.
Yeah,
you can say,
yeah.
Right? So you can begin, so it just simply lays, you've got to break it down. You've got to go, right, now I think, now if you take the FIRE movement, financial independence, retire early, what they're doing is out of the £100 they have today, they're putting £70 in the future. They're putting it all in there. I think that's a little extreme, and I think it's a very dodgy bet on your future emotional state, because there's one thing that we're bad at lots of things, but predicting future emotional states is definitely one of them. So putting 70 out of 100 into the future is potentially disappointing. That's an extreme version. But the other extreme version is putting 70 out of the 100 into the past, because it's that energy that you've taken out the past. You're spending it in
I
in
really
that
like
space.
that. Yeah, way of thinking about it. Yeah. And that's much more meaningful than saying, oh, put this percentage here, put this percentage to that, and whatever. Is actually going like, where are you? Because you can analyze that, can't you? How much is going on the past, present, and future, and then shifting yourself towards, where you would like to go with that, and how you can change that, and something that you can live with. Yeah.
So it also keys you into what's actually going on, because a lot of people are shamed into thinking they have a spending problem when in fact they have an income problem. Right? If my 100 quid is going into today, and I want to make the future more secure, something has to change. I either need to pull in more money from today into today so I can put some into the future, or I need to reduce what I'm spending today so I can put money into the future. Just think it kind of start
or make the number bigger, that you start, the starting point.
Start with a bigger
is,
number. So people think of investment as putting money into ISAs and whatever else it is. And it is in some senses, but actually the biggest investment you make is in yourself. Now you can think about that from the perspective of getting a degree or a qualification or whatever else it is. And those are all great. But the simplest place to start is with your own physical health. That's an investment in yourself. that is going
Yeah.
to have a multiplier effect and help you to earn money. You as Harriet and me as Dennis, we are the biggest factors in our future wealth because it's generated by us, our human capital, what's tucked up away in us. And so if my human capital is degraded by ill health, or let's just say, I'm not looking after myself, or it's degraded because I borrowed too much energy from the future and all my current energy is having to go back to pay those debts, then you can start to see how taking ownership around those parts of your life creates positive outcomes going forward.
Love it. Yeah, brilliant. I have got one more question for you, actually, which I like to ask people, and that is simply, if money were a person, what would you like to say to them?
So I used to really resist this question, and about a year ago, I was on a podcast with a really nice guy, and I realized that I hadn't. What scared me about the question, my discomfort around the question, was my anxiety around money, and I realized that for the whole of my life, if money was it was a person, I was just hanging on to them so tightly. I wouldn't let them leave the room. I wouldn't let them leave the house. I'm like hanging on to it, to money. And so what that means is when you're hanging on to money so tightly, there's no room for anyone else or anything else. And that was my position through the whole of my life. I was hanging on to this. And that's why it was so scary for me to think about it. I resisted that question. Since I
Interesting.
had that understanding around it, and believe me, that wasn't that long ago. It was a year ago or a year and a half ago. So still a way into the journey. So what would I say to money now? I'd say, hi, how you doing? Nice to see you again. Please stay for a while. And I'd love you to be my friend, but if you've got to go for a bit, come back another time. You're always welcome. But my money anxiety won't be triggered when you leave the room.
Yeah. Yeah. Which really sums up, I guess, the journey you've been on as well, essentially, with that discovery and that kind of, belief side of analysing your own,
it's so limiting. If I'm limited to hanging on to everything I have, there's no room to grow it. Some people are eternally optimistic and they always think they can create more money. And that's how you create money. If you're just trying to hang on to it, you shut yourself off to so much positivity. I get the anxiety thing. I have deep compassion for it. I get the scarcity mentality. But ultimately, it's so self-limiting. So, I'm
I really love that. Really good.
On that, and that even the revelation and the understanding doesn't change 50 years of neural hardwiring around it. It's taken me a while. You can manifest all you want and light candles and go, I will be abundant and I will embrace all of that stuff. But my brain has been wired. Well, it's 55 years since. And I need to change that over time. And it does.
And that's why, we do, relapse and obviously have bad days with this stuff. That's the point, isn't it? Is there will be times when you don't, you do feel anxious again. And then you have to remember, actually, I don't, maybe there's, I remember when I feel anxious, I do this and then it is better or whatever. Right. But it's not, it's not a transformation as such. Is it like an overnight transformation? It's something that you work,
not so much. It can be, but only in very rare circumstances. I'm coaching a guy recently who had a vision of his death, and he changed his life on the spot. But obviously, I don't think most people want to have a very detailed description he gave me of his death and his family standing around him. So that shocked him into changing his lifestyle completely. But most of us don't want to go there. So it is a period of breaking it down, and it's also about. And at that point in time, you can do breathing exercises or whatever you want. It's also about saying to the anxiety that comes in, thank you so much. I know you're here to help, but I've got this. I'm all right now. Don't beat up parts of yourself. Don't hate parts of yourself. They all served a purpose, and they were all there to protect you and
it was to
help
keep you safe. That's right.
It was to
Yeah, it
keep
was
you
the
safe.
instincts to keep you safe. Yeah.
Thank you so much. I know you were trying to help. I'm all right now. I've got this.
Yeah.
Self-compassion.
Yeah, amazing. Well, thank you so much. I've really enjoyed that conversation. There's so many interesting places we've been with it. So I'd just like to invite you to share a little bit about where we can find you, and if people are interested perhaps in, the work that they've heard about, what are the next steps to getting in touch with you or to finding out more?
Thank you, Harriet. So everything is available on cambridgemoneycoaching.uk. That's www, I think, or HTTPS. Cambridge Money Coaching, that's all one word, .uk, not .co.uk or not .com. Another thing I wish I had never done, but cambridgemoneycoaching.uk. And you can, there's a list of my services. I do individuals. I work with couples. We do the financial advisor stuff there as well. And if you want to become a money coach, and I think it's the most amazing thing, then you can get details of how that works and the training I do with the Money Coaching Institute. And I do a little bit of parent stuff as well as financial well-being for employees. And the financial well-being stuff is really about helping people understand. It comes from my money coaching work, which means it's deep compassion. It's understanding why so many things are difficult and then how you can take those first steps forward. So, and you can find me on LinkedIn. So please connect with me on LinkedIn at, it's Dennis Harhalakis is LinkedIn. So it's
amazing.
been
and we'll have those links in the show notes so people can just click through.
Yeah, this has been a pleasure. Thank you so much, Harriet.
Likewise, thank you so much for joining us. You've been listening to the Money Story Project podcast with me, Harriet Formby. If you've enjoyed the episode, please follow the show, share it with someone who might want to have a listen, and if you can, leave a review. In the show notes, you'll find links to connect with our guest and to learn more about the project itself. And if you feel called to share your own money story, you'll find details there on how to be part of a future episode. Until next time, take care and have a great day.